Welcome everyone to our Spring Wealth Update. Matt here from the group, joined by Mr. Craig Holly. How are you, Craig?
Good, thanks, Matt. Great to be back. Thank you.
Yeah. So, quick update. We're going to do these quarterly now rather than every month, which we did during COVID. Obviously, things have settled down into the new normal, so we thought we'll keep in touch with everyone every quarter. So, a quick sort of 5-minute video, a bit of an update. So Craig, obviously the general advice warning that we've got to
Yeah, anything here is general in nature, guys, so we're not taking into account your personal situation. So what's on the agenda today, Matt?
So today thought run through a bit of a market update. Obviously pretty topical what's happened the last 6 months, so I'll get Mr. Holly to give us an update there. Then budget update, that was last month, so probably in financial planning, not too many changes there, but obviously some tax changes. And then just obviously take action. We'll have a bit of a talk about what we've seen the last sort of 6 months with COVID and how that's affecting people. So from a market point of view, Craig, do you want to give us a bit of a snapshot what's happened the last 9 months?
Yeah, sure, Matt. Yes, there's been some really big differences in markets. So as you can see here, since I'll call it the coronavirus March low in the markets, US shares have been, they're up the top there. They've been mainly driven by tech stocks, which have had a great run. Second in line there, we've got emerging market shares, which has probably been mainly driven by China and the fact that they were the first to get hit by the virus and subsequently the first to start to recover out of the virus. We've got US shares, Australian shares there in the middle. We had a pretty good run early on, but since Victoria's gone back into lockdown, that's impacted the broader economy here in Australia. So that's the reason for that, and also banking stocks, mining stocks, things of that nature as well. And at the bottom of the chart there, we've got the UK shares, which poor old UK was just starting to come out of lockdown, or looking like they were coming out of lockdown, and yeah, they've just gone back in for another 4 weeks. Unfortunately, so we'll see how that plays out.
So obviously, Craig, looking at different sectors, it's obviously COVID's had a different impact on the various, I suppose, sectors in the share market as well.
It has, yeah. If we drill down here to a bit deeper to the sectors, it shows that over the same time period here, we've got IT companies, top of the pops there, which is mainly due to people working from home, like myself at the moment. And the technology that goes behind that to help that happen. And then we've got consumer discretionary there, close second, which is non-essential spending, so retail, home improvements, things of that nature. So if people aren't traveling, then generally they're spending it elsewhere. So that's helped that area. We've got financials sitting in the middle there. So financials has been a bit of a tricky one because there's anticipated loan defaults and things of that nature that are already priced in. So it should have substantial growth over the long term, but just short term, there's a few worries there. And poor old energy at the bottom there. It's whenever there's mass travel cancellations, people working from home, the demand for oil is very low. So that's the main reason for the drop in energy stocks there. So one thing we've had recently is the budget in Australia. So Matt, you got any updates there?
Yep. So obviously a big major focus for the government was getting people spending again. So obviously the quickest way to get people to spend is cut tax rates. So they backdated the tax cut. So these were planned to come in 2022 and they've backdated them to 1 July. So for most people, it's an extra $1,000 or $2,000 in your hip pocket this year. So generally people, when they get extra money, they look to spend it. So that's aimed at stimulating the economy. So they brought that forward. Then there was obviously people on Centrelink back in March and June, July, they got a $750 payment. They're now going to get another $250 in December and March. So most people that are on Centrelink will get that payment coming through. Obviously the big one was this instant write-off, so for businesses. So normally a business goes and buys a truck and they've got to depreciate it and write it off over a number of years. Now the government have opened it up for most businesses to be able to write off assets 100% in 1 year. So that's going to stimulate a lot of buying of or bringing forward of expenditure, which will stimulate the economy. So obviously a lot of motor vehicles, a lot of farming equipment, transport equipment, etc. So that would, you'll see a bit of a boom there. And then one that ties in, obviously in our world, is there was a work test where if you could only contribute up to superannuation up to the age of generally it was 65, and after that you had to work and prove that you worked 40 hours in 30 days. So that's been extended to 67. So after 67, to contribute to super, you must work 40 hours in 30 days. So obviously, as the population's working longer, and obviously there's a lot of longevity now, people are maybe reassessing with what's happened with this COVID shutdown, looking at their goals, etc., and maybe working a little bit longer. So, so on that front, Craig, obviously interesting, like the last 6 months, what we've seen from our business point of view, with obviously people reassessing their goals, looking at probably a bit of a line in the sand and looking at their bucket list, because there's no overseas travel at the moment. That's probably on hold for a couple of years. People's super's copped a hit, but it's bounced back to a certain extent. So what are you seeing your end with in relation to this?
There's been a lot of inquiries, demand for single pieces of advice as opposed to comprehensive pieces of advice, which has been good. It's been great to help many people in different ways, whether it's job loss, redundancy, quick review of super. People have got time to look at their cash flow and actually start investing. It's been really good. Yeah.
So on the super point, this is a quick example of just a lot of people are sort of scared of super with, well, can't control it, etc. But I suppose from our point of view, being an accounting-based financial planning firm, it's all about the tax effectiveness of super. So this simple example here, you put in 450,000, whether it's inside super or outside, just the impact over 10 years, same rates of return, but there's obviously different tax. Superannuation at 15% versus we've used 34.5%, which is in that sort of $20,000 to $90,000 bracket, tax bracket there. So so you can see the impact over 10 years. It's almost $100,000 or over $100,000 better off within super. So there's huge benefits. Obviously, we talk about leading up to retirement, trying to get a lot of your assets inside super. The main reason is tax effectiveness. And obviously, once you retire, and you're over 60 and you turn your super fund into pension mode, that tax rate drops to nil. So, but this is a pretty simple example. It's very generic. We can sit down with individuals and sort of run through their own situation in regards to this, but just a good way of showing the benefits of super. So obviously, Craig, what we've seen in the last 6 months, lots of inquiries, I suppose, and people contacting us. I think we've had a record October with new clients wanting to see us. What are you seeing is driving that?
Well, it's mainly just dramatic change or sudden changes around circumstances. Whether it be job changes, relocation changes, anything. There's a lot of change happening, obviously, which as we adapt to the new way of doing things. So again, I encourage everyone just to reach out, even if it's just a simple question. We can point you in the right direction to get some help, or we help you ourselves. So yeah, please reach out.
Yeah, and most of those appointments we're getting are all referrals from existing clients that are speaking.
Yes.
I've got friends or family, etc., that something's changed or they're unsure with COVID, how's this affected our retirement plans, etc. They've contacted us and come in for a chat. So obviously we do a complimentary initial catch-up that's very high level. We don't give advice at that appointment, but it's more whether can we help you and what are you looking at doing. And obviously if we can't help you personally, we'll point you in the right direction. So so please sing out. You can jump on our website, obviously give us a call, but on our website you can book directly in to see us, Craig or myself, and obviously we're travelling back and forth up to Alice Springs as well. So thanks for the update, Craig.
No worries, thanks, Matt.
We won't chat probably we might do one just before Christmas, but before we know it, Christmas will be around and summer will be here. So take care, everyone, and we'll chat soon.
Thanks, guys.